Boo 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 boo. Boo 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 boo. Yeah, I see ya. Right. Boo 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 boo. Let's just go and put this link in. So. Boo 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 boo. Okay. You can hear me okay anyway, can't you, go? Okay, no worries. Where's that link gone? Okay, I'll just get it from here. Invite, invite, invite. I'm recording. Maybe you can record as well, just to be sure. Oh, start meeting now. Okay, I've already started it. Okay, I'm just going to. The session is already running. Okay, sorry, go away. Invite and copy invitation. Okay. Now here we go. I'm not really. I'm just posting it up on the chat at the moment, or on the academy at the moment. But it's there in recent topics, or it'll be there in recent topics in a moment. Come on, submit. Go, go, go. Okay, Gil. Here is essentially it. And copy and paste, Gil. Paste and put it in there. Okay, I'm switching off WhatsApp now. Yeah, we have some people coming in. Good, good. Boo, 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 boo. How many have we got? Well, we got a few. We'll wait for some more. We'll wait for some more. Yeah, everybody's coming. Good. Everybody's coming. Good. Hey, Victor, things are pretty loud around your end. I'm going to mute you for now. But anybody who wants to chat throughout this, just chat away. Okay, we'll still wait for a few more people. We've done the sound test and everybody can hear me okay. But let me just type into the chat to tell me if you can't hear me. If you can hear me, please say so. You can't hear me? Okay, so we have one who can't hear me. This is all if you can't hear me. Okay, so. Okay. You can. I think everybody can hear me then. If one can, everybody can. Hiya.
Hey.
Hello, how are you doing?
Oh, fine. Thank you. Thank you for
Perfect.
inviting us.
Yay. Thank you very much for coming. Now, we've got 9 people. We should have a few more. I'll give it another couple of minutes and we can kick off.
Perfect.
You know, it's amazing to have somebody actually talk to me in a webinar straight off. Usually people are way too coy to actually open their mouths. So good. We might get some interaction here, which is great.
Perfect. I actually was testing my audio, so hello guys, nice to meet you. I'm Eugene.
Gotcha. Hello. All right, we got a good gang here. I'll still give it another minute. I don't know how many we're expecting. Gil will tell me when we're full. Okay, whatever that background noise is, it's going to destroy my brain. So if everybody could mute themselves until they want to speak, that's perfect. Excellent, excellent. Good, good. And another couple of minutes and it'll be cool. With me, to be near enough to the schedule is very, very good. If I can be within 15 or 20 minutes on time, I'm very, very happy. And I'm sure the rest of you are traders as well, so you are going to not be particularly on time for everything, so we'll still give another couple of minutes. It's all being recorded anyway, so nobody's going to miss anything. Okay, I'll chill a minute. I'm pretty sure that there's going to be a big dog barking through this webinar as well. You'll just get used to him. That's Pip, and he makes noise. There's no two ways about it. Right, 13. I think we should have another couple more coming in. And we're only a few minutes past the start time, so all is good. Okay, more coming. Good, good. I'll roll 2 cigarettes for the webinar. That'll keep me busy while I wait for you guys. And Mark is here, that's good. Will you tell me when we're full up and how many we should be expecting? Because I forget. Aha. Okay, well then we should have 17 people here. We'll give it another couple of minutes. Sorry, everybody. Oh, we have one who's gone. Come on back. Well, no, if it's 15 who signed up then. Myself and Gil didn't exactly sign up. So it should be 17. Now we want Bobby back. Oh, he's back. Okay, good. Okay, so are we missing a couple? We're missing 3, I think. No, we're missing 2 now. Okay. Maybe they just can't make it and will be watching the recording. That's okay too. Okay, 7 minutes past is good enough time to kick off. Yeah, perfect. All right, so everybody, welcome to the Academy Light. We're on the first part, or the first course of the Academy Light, which is the Quasimodo and the Diamond. Very wonderful subject. These things happen an awful lot. I'm going to be giving away during this webinar and during this course of classes more than I want to give away to you guys, but that's just what I do anyway. So yes, you can look forward to learning more than I really want to teach you. Fine, that's good enough with me though. All right, now I have good news and I have bad news about this. I had thought that I would be able to teach this entire class in one go by using your examples that you have given in your homework, and I'd have more than enough examples in that to actually work with, but a lot of you didn't exactly do all of your assignments, and some people didn't do any assignments at all. So the bad news is that we're going to have to get you after this webinar to complete your assignments. and to look at the assignments, the bits that you've done already, and I want you to go over those and tell me what's right and wrong with them after you've had this class. So this class is going to run into the next class, simply to give you guys the chance to actually work on this yourselves and make it real for yourselves. So we're going to have lots of drawing examples, the theory of it. We're going to have some chart examples at the end, some of which are good and some of which look good but aren't good. And we'll go through those later on. For now, though, we'll go on to the theory of the Quasimodo. Now, we'll start with the Quasimodo as most people see it. Now, how do I get rid of this thing at the bottom? Let me there. Oh, there we go. It's gone. Yeah, right. So as most people see it, now what have we got? We've got two Quasimodos here. One is bearish. Here it is a sign to go down, and here it is a sign to go up. Well, that's what they think anyway. So we'll look at the bearish one. What have we got? Well, we've got a high, and that's perfect. You guys can see my cursor, can't you? I hope you can. Yes, good. Glad to hear it. Excellent. Now, where's it gone? There it is. Ook, come back here. Come back. Alrighty. So we have a high here, and we have a low there, and then we have a higher high, and then a lower low, and then they want to sell here. Now that is a Quasimodo as most people see it. Now, loud microphone level. Am I too loud for you guys? This thing is telling me I'm too loud. Nope, good. Okay, well then I shall ignore what it tells me. Good. Okay. So that's what the world thinks Quasimodo is. It's a low and a lower low down here, and a high and a higher high over there. Now, the high with the higher high, that is absolutely brilliant. We love that, and that is part of just about every bit of PA that we have. And we really need this because the guys that run the market, if they want to sell, then they are going to want people to buy to them. So once we get to a good level, we can have, we can create a high here, and then we can make it look bearish. So what can we do? We can drop price down, and one thing that they love to do here is to make a low along the way and then retrace a bit from it and then make a lower low. So in that, they have just started a trend of, or a downtrend with a high, a low, and a high and a lower low. That is a downtrend. So people, once price gets back up towards this high again in this supply, they're going to start selling there. And having them selling there is absolutely brilliant for the ITs, because where do the retailers put their stops? Well, they'll put it above the high. So they have started selling as price comes up to here, or they've started selling on the first engulf down over here, and then they're under pressure when price gets over here. Then price comes up, and very often it will bounce a little bit just before this high to make it look like the high is going to work as a supply, and then they'll actually break the high. Now, what does breaking the high do? Well, it gets in buyers for a start, because you now have a higher high, and then your sellers that were selling here and were selling down there and down here, their stops are just above this. So the stops on the sells that they have are buys. So now you have, at a very high price, you have the retailers buying, and that is exactly what the IT wants them to do. He wants them to buy so that he can sell to them. So yes, the higher high on a bearish Quasimodo is very, very important. It catches stops. Simple as that. It catches stops, and it catches breakout traders in the wrong direction. So that's perfect. Now, what did they do? They bring it down, and they may react to the demand here. They very often do react to the demand there, but they will ultimately break it down. Now, that can be a signal that price is going to go down. In this case, it isn't. I'll explain that to you in a minute. This is what they do anyway. They will give eventually the signal that they are going down if they are going down. And then they bring price back up to the Quasimodo level again. Left shoulders are extremely important places. For every bit of price action that you have, for every trade you'll ever take, left shoulders are vital. absolutely vital. So this is a really important place. What you've got is a left shoulder over here, and then you'll see either in this time frame or in a lower time frame, you'll find in this case, you'll find a drop, base, rally, base, drop in there. You'll find a little kink in there. And the kink that crosses this left shoulder line is very important. It is where you should start and finish selling on a Quasimodo. So, okay, what have we got here on the bullish Quasimodo that people think is a real one? Well, we've got the low and we've got the lower low. This, of course, will catch the breakout traders and the stops. Brilliant for the ITs. And then we've got the high and the higher high over here. And then you'll buy at the kink of the left shoulder over here. So that is what most people think. And it's very close to what a Quasimodo is. Now, next. Come on, next. But not everything which looks like a Quasimodo is a Quasimodo. What have we got here? Well, here we have what looks like a Quasimodo. We have a high and a low and a higher high and a lower low. So it looks like a Quasimodo. But the lower low is just an engulf of the low. So here's our low and the low is engulfed. So it looks like PA, but it really isn't PA. Because what we've got over here is, well, we've got a high over in the past, and that high got broken here, and then there was a kink formed where the high was broken, and that is the first thing that has to break for there to be PA. And if it doesn't break here, it just came and touched it. So this just could be a flag which is getting bigger. This could easily go up from here. There's no saying whatsoever that it's going to go down because it's just hit RS here. And RS it's not exactly to the pip where a high or a low is. It is where the higher low has been broken and retraced to. That is your RS, and that could be very, very deep. So until that gets broken, there's no PA. If there was PA, perhaps this would be the next place to actually look for price to go to. But this as well has to rely on the left shoulder. You have to have something over here, another high on the left shoulder, of which this is the kink, which will be your next target for a break of this. So this thing, it didn't even engulf the FTR of the break of the last high. Fair enough. Now you guys know what FTRs are and all that sort of business, so I don't need to explain that to you. So this is not a usable Quasimodo. It has a high and a higher high and a lower low, but that doesn't mean anything. It didn't really make any PA. So okay. So now what have we? All right, we can have a usable Quasimodo here. What have we got? We're up at a supply, whether it be an RS or a true supply or whatever it is. We have it, and now we have PA. We have price making a high beforehand, and then getting sellers in, and then getting more sellers in here perhaps, and then taking out their stops above as we get into the supply or the RS or whatever it is. It could be pre-compression, it could be the end of compression, anything like that. This is our zone and we're now in it. And what have we done? We have, yes, we've broken our low, which is something, but it's not everything. What we really have done is we've broken an RS. And that is the very important thing in this Quasimodo. It's not that we have a lower low. I mean, the low here so very often just reacts to this. This low would more often than not be down here as a reaction to this flag limit that we've got here, to this FTR. And then the lower low means nothing until it has actually broken a flag limit. And this is a nice flag limit to have broken, and it's gorgeous. So what have we got? We actually have real PA now. We have a break of a flag limit once we have actually touched a flag limit. So it's a perfect place to have price action from, and then we have perfect price action in it. Now, once price has broken the RS, where is it going to go to next? You have to look left on this and see that there is a Quasimodo level over here. Now this Quasimodo level, this left shoulder should have bounced price down when it hit it again, because price loves left shoulders. It loves symmetry. This area here should have been filled up again down here. Simple as that. You should have had your symmetry in the market, but you didn't. So this Quasimodo level, this left shoulder level, which got broken, is very important. So you can't say that once price has broken this RS that it's going to go all the way down to demand. You just can't do that. You will look to the left shoulder level on that, and that's your next target. So here is your kink. Here's where the Quasimodo level broke up, and there's as far as it went after it broke up, and here's as far as it retraced after it broke up. So this is your next target. So what have I written here? This looks like a Quasimodo and is one. The higher high hit the upper flag limit, perfect. Then engulfed a lower flag limit over here without hitting the next flag limit, lower flag limit below that, here. Perfect. So price will now hit B before it can break A. And that's just perfect and absolutely lovely. So you're going to get to here before you can break this. Simple as that. Now, nobody's saying you're going to break this. This is the first target, and price can, of course, bounce from B, then up above A. Nothing to stop it. So this is a lovely place. You've got your high over here. It's a gorgeous place to actually take a trade from, down as far as B. Okay, so we have a trade, but we must be sure that the trade fits our criteria for a good trade, obviously. So this is very simple stuff, but it's important to note there are 4 parts to every trade. There's where you enter, there's where you place your stop loss, there's where you put your target, and from these you work out your return, which is R, and we want the return to be at least 1. We want to make sure that we're always going to be getting back at least as much as we risk on a trade. So what have we got here? For short, let's say here's our entry here. So we want to work out our R to make sure this is good. We know that we have a good level that we're working from. We know that we have PA, and we know what our target is. Now, for the target for a sell must always be your predicted spread above the target line. There's no point in saying that right here is where price is going to go to and we're going to put our take profit there, because we're on a sell, and a sell will always have a take profit of a buy, and you're always going to buy at the high price, which is the ask price, not the bid price. So your bid price is going to come down to here, absolutely, but your ask price need not come all the way down to here. So you're going to have to either watch the trade, and once the bid hits this line, then you know you can stop it, and you will have closed your trade at wherever the ask line was. So, okay, just to the maths of it, very simple. Your return is your entry price minus your target. It's this, so it's this amount of pips here, over your stop loss minus your entry. So your R is this relative to that. Simple as that. And if your R is greater or is equal to or greater than 1, then you are in for a great trade. And you are in for a trade which really works for you. And very often you can take trades with far higher than 1 R. I mean, really far higher than 1 R. But what I want you guys to do with your knowledge on this is not get too bogged down in the technical details of all of this. I don't want you necessarily to understand the entire market, because you don't need to understand the entire market to do these trades. You simply need a few things. You simply need to understand that you have PA. You simply need to understand where your target is, whether it has hit it or not, and understand what your R is. So the reason I have put R at greater than equal to 1 is that you are going to lose some of these trades. Not everything works perfectly all the time. Nearly all the time it works perfectly, but that is absolutely no reason to put 50% or 100% or 20% of your account on any one trade. You just don't do that. You keep your money management tight, and you'll never risk more than around 2% on any of these trades. But with this, using our method, you are going to win far more times than you're going to lose. And it's totally okay to lose. I want you to understand from the very start, losing is fine on these once you actually stick to your trade plan and your money management. So yes, that's it. Here's how we work out the R, and then for a long, well, you know, I'm sure you can figure that out. Of course you can figure that out. It's exactly the same thing, but in reverse. So, okay. The setup you've just seen works well, but it is a little advanced because it is a break into a flag, and not all the left shoulders, which are the targets, are easy to spot. So we can either wait for the entire flag to be engulfed, giving us tradable PA and a way to retrace, or we can look into the lower time frames and take our trade there, keeping our stop loss always beyond the HTF flag limit we are reacting to. Now that's one thing that I saw in a lot of your homework. Let's begin with the flag engulf. Hold on, I want to relate to your homework here. Okay. I saw on a lot of your homework that what you had was lovely Quasimodos, beautiful Quasimodos, yes, but you were putting your stops above this. You're putting it above the higher high. You never ever put your stops just above the higher high ever, because a Quasimodo can turn into a diamond so very easily that it can come. Let's say here is PA on this, grand, we are going to get to there, but we're going to get to here before price can break A, not before price can break the high that we're dealing with, the high that we've just made. So never, ever, ever put your stop loss here. It is exactly what the ITs love. The ITs know that retailers have stops above highs. So you will not be putting your stop just above the high. You will always be putting your stop above what the high is a reaction to. And that keeps you in the right side of a trade. Now that can diminish your return on trades. Greatly it can diminish your return on trades, but it gives your trades a chance to work. So always, always, always put your stop loss beyond the flag limit that we're reacting to. So okay, here we are. If we're trading in all in one time frame, what have we got? Well, we've got an upper flag limit over here that we have broken, and here's the lower flag limit formed after it breaks. So your flag limit is here and it has broken up, so that did give us PA to go up, and then here's the depth of its retrace here, and then once it hits the target beyond, you can actually draw this flag limit here. Now this flag can expand and expand and expand until it actually gets there, but once it has gotten there, then you will draw the you'll go to the depth of the retrace after this broke, and then back to the furthest it advanced before it retraced from there. So from here back over to here is now your lower flag limit, and you will get PA if that lower flag limit breaks. So now this is a really nice one. It's not like our last example. In the last example, we were around here and we broke into this flag. And if we can find all of our left shoulders perfectly on this, we can trade our way through this flag. But the best one is where the approach flag limit actually breaks, and then there's space down to the next flag limit below. Now, not all of your PA is visible on the screen. So here we have, let's say this is all we have visible on the screen, but over in the past, way back over here to the left, there may be a low, which is in the middle of it over here, or there may be a high, which is in the middle of it over here. So if we have PA in the past actually taking up this space, then we'll have to look, and let's say on this low, we'll have to draw a line over from there and draw the kink where that gets broken. And that is going to be your first target, although this one here is in high, which is a bit further over, so we would draw a line over to there, over from the high that we've got over there, and then our kink that we draw will be the first target there. So we can't always say that just because this flag limit is broken that it's going to get down to the flag limit which approached it on the way, because we can have horrible or wonderful big pieces of PA further over in the past which need to be taken into account. Now, where this isn't so important is in the very, very, very low time frames, like in the tick chart. So very often, the only thing that's going to be in the way between this and this is nothing at all. So you will be able to take this. And in a trading system where you do have space running through and you've got nothing high, no highs or lows in the way over there, then you can have wonderful trades and really simple. Now, in the tick charts, this is often so very plain that you're going to have space in here. And once you do have space, it's the best thing in the world. So do look for space. If you can have the patience to only take trades where there's loads of space between the approach flag limit and the flag limit beyond that, then only take those. But we're not all as patient as each other, you know. They are the best ones, however. So what have we got? I haven't read this yet. If B breaks, okay, B is the approach flag limit. If B breaks, then price will go to the FTR of the next flag C before it can break A. So, okay, the next flag here is C. Now, this isn't exactly the spot we're to look for. We are to look for where the high over here gets broken and then retraces before it moves on. That's the FTR of this, and that is our target. So always put your target as the FTR of these things. So it might be a bit higher in this case. Very often it is that little bit higher because the ITs don't want price to be hitting RS all the time and bouncing. They want price to look like it's gone through RS. Like if price came down deeper into here, that's perfectly fine. It looks like RS has broken, but we know that our kink over here hasn't come down or hasn't been broken, so price can actually break that RS and come down to here and do its thing then and then bounce away from there. RS can work without looking like it worked. I mean, our kink is over here, so if price only comes down and touches this kink, it never actually touched RS per se, but as we know it, it did touch RS, and RS worked perfectly, so all it's got to do is come to this kink over here, and then it's a beautiful RS flip that you've got, which didn't to the retailer look like it was RS, but to us, we know that it is an RS bounce there, and it's beautiful. Okay, so we can take our trade with stop loss above A. Always have your stop loss beyond the flag limit that you are reacting to. Always, every single time. Okay, the target is at C, and we've got to account for spread on this one as well. So, you know, understand your pair and what the spread tends to go to. And in a sell, you've got to be that little bit cautious and make sure that you'll give enough space for the spread on this trade. Otherwise, if you've just got it set, the ask or the bid price can come down and hit exactly where it's supposed to, but the ask price doesn't come down. The ask price stays wide, or the spread stays wide, and the ask price doesn't take out your trade, which would absolutely suck, because then you can be stuck in your short and let price come out and do its next thing, which can be breaking A. So, okay, now our entry, it can be at D. This is very nice. This is the high over here. That's fine. Now, very often, if we've drawn this flag limit properly, our flag limit is actually going to be at the bottom of this flag limit that we've got over here. So if you have the patience, wait for an entry at E. Now you can put part of your position in at D and then another part in at E and then see how you go. Did I just say this? Oh, and so we can take our trade with stop loss above A, target at C, and entry at D, yes. Or if you have the patience and are happy to possibly miss a great trade, wait for your entry at E. So yes, okay, you can take two trades on this if you like. You can put half of your trade in here and half of your trade in there. Then if it only comes up to here and goes away, you've still made your profit, not as much as you would have made, however, if price had have come back up to E and then come down. So yeah, it's up to you. Everybody has their own trading styles. Maybe to start, a good thing to do is put it all in at the high that we've got. You can suffer quite a bit of drawdown on that, but you will eventually be getting to your target anyway, so all is good. I do really like to miss trades, however, and wait for E up here and forget about that one. Now, if this is much higher, if this is up around here, great, go for it. And so often this will be up here because the approach flag so often touches the supply or the demand simply to make it looked like it has worked. Like this one here looks like it's worked. We've got a high and a low and then a higher high, but then we've got a lower low. So it looks like we have a trend reversal here. So over here, if that was the same, it would look like we have a trend reversal at the supply, which is gorgeous. The ITs love that. And then all you have to do is get the sellers to sell in here, no problem with that. And then their stops are going to be beyond here, and the IT will be buying their stops up into the supply, up deeper into the supply. So great. So, okay, what disqualifies a QM setup? Well, Okay, the first one is, well, here is a QM setup. We have a lower flag limit here, which got broken down, and then the upper flag limit was created. And the upper flag limit, as I say, gets drawn once price actually hits its target. So once price gets down to here, we'll be able to draw that upper flag limit that we've got there. And the upper flag limit goes from, once we have broken the lower flag limit, once it gets then to the target, we can go to how far it retraced before it got to the target, and then how far it advanced before that. So there is our upper flag limit. So, okay, now that we've come to our lower flag limit down here, and we have then broken our upper flag limit, price is going to get to the FTR of this next upper flag limit before it can break the lower flag limit. So our perfect trade is back around here, or it's back around here. But what has happened? Price has gone straight to our target up over there, and that happens a lot. Unfortunately, it does happen a lot. And that disqualifies the trade. It means that we've hit our target here. So now it doesn't matter about price coming to here. There's no guarantee of what it's going to do at all. And there's no guarantee that this is going to hold up price now, because price has gone to its first target. So yes, that's a disqualification because it's hit its target. Now, okay, another one is that it has engulfed the flag limit. Now that's a very important one. There is no PA if we have broken the flag limit that we are reacting to. Now, very often, this is going to work like a Quasimodo. Don't get me wrong. This can often come back to there and pick up this price here, or pick up this price over there, and go all the way up. And go all the way up over to there. It can do that, and it does that very often. But the guarantee is now gone that is going to happen, because what you've got here is PA, the price is going to go down, and once you've got PA, the price is going to go down. If this is a higher time frame lower flag limit than this one over here, let's say this is a daily lower flag limit that we've got there, and that's an H4 lower flag limit, then in breaking a daily, we can easily come back and break the H4. And we don't even have to come up and hit the next H4 target up over there, because there's no need to. We have a daily engulf. And if they've gotten themselves loaded up well enough for now, then what they can do is simply break the H4 upper flag limit that we've gotten here and take out all the stops on that, and then they'll have loads of buys there into their cells, and then they can come straight down and hit the next daily level. So if we have broken our level, then the trade is off, unfortunately, but know that, and if it has broken it, forget about it. Now, if there is let's say this flag limit was formed during a weekend or something like that, then there could be price that we don't see in there, and maybe this will be that little bit wider. So if this flag limit happens to be in a weekend gap, try and get a history just to see if over the weekend it actually did come down and give us a deeper lower flag limit over here. That can help you an awful lot in deciding whether something has been broken. So because a flag limit is in a gap, maybe you should look and try and get the best history that you can get, just to see if the flag limit is that bit wider. But for now, just generally consider that if we have broken our level, that our PA isn't valid. Okay, now another one is here we have our lower flag limit getting broken, and then this is a fake upper flag limit, because we can't draw the upper flag limit until we have actually hit our target below. So if it didn't yet hit the flag limit and engulf back up here, is no PA, because this here could simply be another example like that one there, where it's just the flag expanding. Price actually has to hit our next level before it can make PA. So this isn't PA, this is just a box getting bigger. So if price goes from here all the way down to there, then the upper flag limit will be from the high of this to the depth it went to after it broke the lower flag limit before, and we just have a bigger box. So yes, we must touch our level before we can get PA. So it's disqualified if it didn't touch the flag limit. Okay, now another one is that our R is too low. Unfortunately, we've got to look after our R, and we've got to make sure that we're on 1 at least. So here we have price hitting our lower flag limit, and then it breaks the upper flag limit that we've got over here. Now we can take a trade from over here, and our risk is, no, our reward is the size of this green arrow, but our risk is bigger than that. So that's no good for us, and we can't take a trade like that. We really must have our R, R greater than 1. Sorry. Oh, no. This is disqualification. So if R is less than 1, it is disqualified. Yes. So beware of that. Now, the above is focused on PA seen in the same scale as the flag limits we're reacting to. Going down into lower time frame works exactly the same. However, should we get our first reversal engulf in lower time frame, there's a strong possibility the price will then retrace all the way back to the HTF, the higher time frame approach flag limit. So let's see what I'm talking about there. And yes, you are going to be rewinding and repeating this video a lot because we're going to get through it pretty quickly, but there's a lot in it and so much of it can easily be forgotten. I'm trying to keep it as concise as possible, but still you're going to be rewatching it a lot. So, okay, what have we got? With the engulf of the lower time frame, lower flag limit A, which is this over here, we are promised the lower time frame, lower flag limit B. Okay, so once we've broken this guy over here, we are going to hit this one over here. And that's fine, but we've now made our first bit of PA into this open space over here. And the ITs absolutely love to fill ranges and to get the best price on everything. So if they're going to be bringing price above here later on, they're going to want to come back all the way to the beginning of this move or even beyond it, so that they can pick up the best orders at the best price and shake people out on the way, get them trading in the right direction and let them have their stops beyond the last high or low, and then take out those stops by breaking it. Simple as that. Okay, so now we're promised this, and that's fine. But there is also a very strong possibility that we'll now complete to the HTF, the higher time frame, lower flag limit D. So, okay, this is a higher time frame upper flag limit. These are all lower time frame ones. This is a higher time frame lower flag limit, which got broken up, and then this makes, once price of course got down to the target beyond, this then became the higher time frame upper flag limit, and then that got broken up here, and as soon as price got up to the upper flag limit above, then we could draw this as the lower time frame or the higher time frame lower flag limit. And now that we've gotten back into this, we've had our first engulf here, so we're very likely now. You can't just say that we're definitely going to come and we're going to hit the bottom of this range and we're going to come down to point D over here, or we're going to come down to the MPL of this flag over here. You can't say that. It very, very often happens. Really, it happens an awful lot, but you can't be promised it. But what you can do is, at B, once price gets there, take off enough of your position so that if price actually comes from B and then takes out your stop loss, that you haven't lost. Make sure that you can go to break even at least when price actually, or if and when price actually breaks the upper flag limit that we're dealing with and hits our stop. Then you haven't lost on the trade. Now, you do hear people talking of going to break even and setting your trade at break even. Our idea of setting at break even is absolutely nothing like that. Let's say that we entered here, which is a good place to enter. It's at the Quasimodo level over there. Now, when most people talk about setting oh, where's my cursor? About setting the stop loss at break even. They talk about your entry over here. Once price goes back over here, set your stop loss back up there at your entry line. That's no good. That's absolutely no good, because price can come back so easily to your entry, and then go straight to your target after that. You really don't want to be doing that. So if we are to set our trade at break even, what we do is we wait for our target to be hit, our first target to be hit, and then we take off enough of our trade so that if our stop loss gets taken out, we are not in a loss. So our setting at break even is not about moving the stop loss to your entry. It is about reducing the size of your position, keeping your stop loss in exactly the same place. It's a very simple concept, and most people don't get it at all. But just do that and you will be on a serious winner nearly all the time. If you want, of course, and you've been doing all your winning, I hate to see it happen, but you can do it. You can say, okay, I'm prepared to lose my 2% on this, and watch as price comes and fills this range again down to D. You are always at the risk of losing your 2% if you do that. And now remember, we are so often going to hit D down here, but there's no promise of it. As I say, it's just something that happens a lot. So you are gambling by not taking out part of your position at B. And gambling, I don't like gambling. I really don't like gambling. So I would take out enough at B so that if price comes and takes out the stop, I haven't lost anything. But everybody's different. If you like losing, great, then go ahead and wait for this whole thing to pan out and then see what happens. But really, I'd go with caution first, because the most important thing in trading is keeping your money and not letting winners turn into losers. So set your trade at break even. Now, once again, I'll say that is not setting your stop loss back at the entry point. It is reducing the size of your position so that if stop loss gets hit, you do not lose. Okay, simple as that. So, yes, it is as simple as that. The theory of the Quasimodo is as simple as that. So before we apply it to real charts, let's take a look at the diamond. Now, the diamond is a Quasimodo setup. It just is a Quasimodo setup. They are pretty much the same thing. So what have we got here? It is a lovely QM, as I have written. Yes, it's very, very nice. It has all the ingredients of a great trade. We have every reason to place an entry at the left shoulder level. We have every reason to place a trade there, which is great. And we can place a trade there. But there's a reason we put our stop loss beyond the flag limit we're reacting to. Absolutely there is. Maybe the next chart will show us why. It does. Yay, I did so well here. Okay. While we did have a touch of the upper flag limit, and we did have a touch of the upper flag limit, followed by engulf of the approach flag limit. So what have we? We have a lower flag limit here, and then an upper flag limit over there, and then here's our lower flag limit here. Now we do have the engulf of the lower flag limit, and price is going to come down to this point over here before it can break this up over here. But we didn't actually pick up the last set of orders in the upper flag limit, where the real trick in the flag limit occurred. Now, what do I mean by the real trick in the flag limit? This over here is the most typical shape you're ever going to come up with or come up against in the market. It's gorgeous. It is price making an high and then making a higher high and then shooting down. Happens all the time. It is simply a way of a way for the ITs to catch stop losses and catch breakout traders trading in the wrong direction. Now, the stop losses, of course, are for traders that were trading in the right direction, but who had their stops above the high. The stops above the high make for buys at a beautiful place to sell. So we look for that, and that is our MPL of our flag limit, and that is extremely attractive to ITs. Really, really, it's attractive to ITs. It's the best price you can get inside a flag limit, so they want it, and very, very often they're going to get it. So yes, this is the best price in the flag limit and will always be attractive to the IT. So what have we got? Here We have our retail Quasimodo sellers. Our Quasimodo is here. There's our left shoulder. They will be selling there. Now, they're going to do the usual thing, the really silly thing of putting their stop loss beyond the high. And that's just, it's what everybody's taught to do. It's part of the propaganda in the market. And in every forum you're ever going to find, people are going to be telling you, put your stop loss beyond the high or beyond the low, and that's where you're safe. That's not where you're safe. Absolutely, that is not where you're safe. That, you've been taught that simply by the people who want you to do that so that you can lose. It is never beyond the high or the low. It is beyond the flag limit that we are reacting to. Because, okay, what have we got? We've got our PA over here, and we've got our sellers then getting in here, and we can be selling there. Very happily, we can be selling there, and our sale is in there. But our stop loss is beyond here. So it doesn't matter, we're always very happy because we know that the best price in this flag limit is not here at the RS of it, it is over here at the MPL of it, and we've got to expect price to get there. So if we did get our PA here, I mean, with this, I would sometimes imagine that I would take this Quasimodo level, but most of the time I actually wouldn't take this Quasimodo level because I would be waiting for this MPL over here, and I'd actually wait for the best price to be taken. And that is over here, as I say, at the MPL. So price can come to the MPL, and then it can come, and it's going to get down to the target beyond, but it can mess around a little bit on the way. And very often we're going to have something like this over here. It's going to hit this flag limit here. Of course, left shoulders are all very important. So as price comes up to this left shoulder, it's going to bounce a little there, and at that left shoulder, it's going to bounce a little there, and at this left shoulder, it's going to bounce as well. And in this case, it bounced and came all the way down. So what have I written here? Okay, we've got this. Sellers stops are, of course, buys, very important, and buys are great when the ITs want to sell. So, okay, breaking the QM level, and then the higher high is brilliant for the IT. The QM gets sellers in, and the break of the higher high turns those sellers into buyers because their stops are there. Yes, buyers at a very high price, and the IT very happy to sell to them. Very simple, really simple move, and it happens a lot. It happens an awful lot. It's great for catching stops, and where we want to be entering trade is where the stops are. Simple as that. So that's why I absolutely adore the diamond. It is just gorgeous for taking out stops and for really loading up the ITs and loading up their positions. So yeah, it's gorgeous. Now, okay. Right, so should you see a QM form very early in the flag limit, like this over here, it's prudent to put half your position on at the QM level. So here you'd put 50% of your trade on. So let's say you're risking 2% of your account on this, then over here you're going to have a 1% risk between the kink, which we've got over here. And remember, it's not just the left shoulder. We will look for the kink in here, and we'll take our trade from that kink, and wherever we're taking our trade from up to beyond the flag limit that we're reacting to, where our stop loss is, that is our risk on this particular trade. So we could have 1% risk between here and here, and the reward is still great. The reward is still from our entry down to here, which is greater than the risk, and that's wonderful. So if it does just come to this Quasimodo level, we are in and we're happy. So if it bounces straight down to the next level, we have won, and we've won nicely, and that's great. But if price actually comes up to our MPL over here, taking out all the stops beyond here, it's even better for us. We can then have 1% of our trade on this space here, which gives us much better return, far better returns than the 1% in here. And then we can watch price come down to our target, and then we can take everything out, or we can watch for PA to go against us. So what have I written here? You should see the R on that entry would be far greater than that of the QM, as well as the entry is so much closer to the stop loss. Yes, I've just said that, and that's lovely. So it's a gorgeous way of trading the diamond. Great, lovely. Onwards. Okay. Oh, I see. We're about to go onto the charts. Now, this is where it gets a little bit hairy, and this is where I'm going to be getting you guys to be doing more homework this week, and then we're going to finish this class next week once you've gotten all your homework marked or your homework done, because enough wasn't done to actually warrant this lesson. So I want more from you guys. I have to see that you're putting lots in. Some of you did absolutely brilliantly and did exactly what you were asked, and I'm delighted with that. Other ones then maybe didn't have the time or something, but I'm giving you one more week to get the time together to do this, because it's really important that you work at this. Me telling you something is not, it's great that I can tell you something, and it's wonderful that I can tell you something, but it means nothing if you don't make it your own. So you have to work at this, and you have to work at this damned hard. Okay, so the diamond is simply a very clever extension of the Quasimodo. It sure is. It takes into account the retailer's predilection for putting their stops beyond the highs and the lows. And yes, when you look at your own homework that you did, so many of you put the high or put the stops beyond the highs and the lows, and I want you to never, ever, ever do that again. So do we, what? Come back. Okay, do we ever place our stops beyond the highs and lows? No, we put our stops beyond the flag limits we're reacting to. Great. Okay, without further ado, we'll apply what we've learned to the real charts and try to make spotting PA and properly placing all elements of our trades simple. Good. Right, so, okay, here is one of the bits of homework which is there. And when I started working on this, I actually thought that it was around here that we were looking at for the trade. But it wasn't. It was actually around here that we were looking at for the trade. But I want to just look at this anyway and see exactly what we're looking at and see what I saw first on it. Well, what we've got here is, I think I marked this up on the next chart actually. I marked it up on the next chart. And there's something that you'll see between these two charts which makes a big difference between them. Okay, back. This chart is maybe 1200 and something DPI, and the next one then is the full 1920 DPI. And the 1920 DPI is just wonderful. You get so much more to see on your charts. So if any of you ever start thinking, right, I need loads and loads of screens be able to trade better, loads and loads of screens mean absolutely nothing. The most important thing is on each screen that you've got to get as much information as you can possibly get into it. So I've got all of this. I've even stopped short on this. I mean, I can bring price all the way over to there to work with. I just choose to have it back a little bit. And I'm right back there to April 2016, whereas this is the same size candles and whatnot, but it's back to 6th of May. You can get an awful lot more in and get an awful lot more information just by having higher resolution on your screen. Very important stuff. But anyway, this is where I thought that we were looking at first. And what have we got? Well, we have got this low over here, and this low on top of that low there actually makes this a compression here. And what did we do? We broke into the compression here, and then we made an upper flag limit. So now, that becomes an upper flag limit there. Do I have the rest of this? No, hold on. I must have put in the wrong drawing there. Okay, this would make this an upper flag limit that we've got there. Now, if that got broken by this, then we would have PA to be going up to the next level. The next level, we look for symmetry here. We see that we broke into, okay, good point. I've been thinking a 24-inch monitor would be, hold on, let me check that. I've been thinking a 24-inch monitor would be much better to view chart than on my current 17, which I have to keep scrolling. Absolutely, I'm on a 24 and they're not that expensive, but you can see so much stuff in them. They're absolutely wonderful. So yes, go for a big screen, high resolution on it, you'll do so much better than having loads of screens. So if there's an investment that needs to be made, let it be in getting as much as you can into one screen. Let that be that, and it's a wonderful thing. So go with that if you possibly ever can when you're thinking of upgrading. So okay, what would have been great PA here is for this upper flag limit to get broken. Now, this would have been a great place to break it, but it actually didn't. This is actually either at that price or that little bit lower. But if it had broken, we would have gone for symmetry over here, and we would have looked to the other side of this flag over there and its kink. Now remember, we're always looking for kinks. So had this actually broken up, or had this actually broken that upper flag limit there, then before price came and broke what we're reacting to. Now this is a very, very big lower flag limit that we've got here, but it is a left shoulder level over here. Our kink is on it there, so yes, we have hit it. We have hit our Quasimodo level on this. We have hit our left shoulder level, and before price can break this, price would get up to there, and beautifully it would. In this case though, it did not have the PA. The PA happened when this got broken, and that was over there, and price actually went straight up to its target and actually then went through that target, which is another great thing. And then price came down into here. Another target as well for it, with the information we've got on the chart, is another left shoulder over here. The kink of it is in there, and that would be a great place as well to be looking for a buy had this actually engulfed. Now this is all hypothetical. This is had this engulfed, and as I see it, it didn't engulf, so it's not a trade we could take, but it is something that I just wanted to show you anyway, as I had started drawing it. And of course, all stops on these things are going to be beyond the flag limit that we're dealing with. But it seems that, let me go back. It seems that this is the trade that we were looking at over here. So we'll go and take a look at that trade. All right, well, here we do have a lower flag limit, and this has broken up this and come back to there. So we do have a flag limit there, and we're reacting in pre-compression here. You see these two lows over here, these are actually a compression, and they're lining up really well with this over here, this left shoulder. So it's a really, really nice place to actually look for a bounce and maybe fill this range again. So what have we got? Boo. Isn't this it? USD CHF? Yes, it is. This is the trade then. All right, what have we got? Okay, stop loss down here. First of all, absolutely no, we do not put our stop loss beyond our lows. We put them beyond what we're a reaction to. So let's go back. Our stop loss on this trade would be beyond here. Absolutely. No stop loss there, always stop loss there. Know that and always be aware of that. So stop loss is beyond what we're reacting to. So what have we got? We say that we've got PA inside here. Okay. Right. Well, we've got a left shoulder here, and then that has its kink over here. So our first PA will be once this kink gets broken. And I do believe that this did break that kink. And that gives us then PA to go to the next level. Now, I was sure that I had drawn on this, and I didn't. Hold on. Boop, 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 boom. I see you take the kink after breaking QM line. Oh, let me read that. I see you take the kink after breaking QM line to the left. So you're not looking for the flag limit after break of the SR. You just draw a line. That's the thing about these kinks. They are very important. You do draw a line. I'll draw a line from here over to here, and I'll see where it's been broken, and then I'll draw where it retraced to before it advanced. So my kink is going to be between there and where it retraced to up over there before it advanced. So my kink is exactly this. And if this kink breaks, then it's going to go to the next place. And for me, the next place is over here. I'll draw this line straight across, and then draw the kink on that. Now, if there was space between the break of this and that next kink up over there, we do absolutely have a trade there. And price is going to get to, after breaking this, it's going to get to that. But these are pretty much on top of each other, unfortunately, which does suck an awful lot. And this does happen where you can get clear PA, but it's hit its target. And in this, it would have hit its target. It's broken the kink of this here and gone to the kink of that there. one right on top of the other. Even if there's just half a pip beyond or between this and the low of that over there, you still have your trade. You can wait for price to come. Your engulf is here. You can get in here, or you can get in here, or you can wait for a more diamond level, even down further, and it looks to me like we did have a diamond over here. This was our engulf, and then price came and took out the last low, which it's totally entitled to do. It's totally entitled to make that diamond and do beautiful things, take out all the stops over here, and then go where it's supposed to go. Where it was supposed to go was this low over here, and I believe that it did hit that already. So shame about that, but this actually did work out. It was in a really nice place, and it just wanted to fill the range that we've got in there, and it did fill the range really nicely. Isn't the lower kink the mouth of the... Oh, hold on, let me open up that chat. I've lost it. Isn't the lower kink the mouth of the flag limit like structure, meaning it will go to the MPL? Now, maybe you should talk to me about this. Have you got a microphone? Nope. Okay. Right. The lower kink, that is this one over here. Yes, okay. Isn't it the mouth of the flag limit like structure, meaning it will go to the MPL? Well, that's what I'm saying. It does love to fill ranges, and they do absolutely love to fill ranges, but not necessarily with this. Now, okay, this is the bottom of this flag that we've got there, and that's the top of it. PA then, to bring us up through the flag, would be a break of this. Absolutely, it would be a break of this. We're very likely to break the flag once we've actually broken in here. What we've got is a compression going on in here. You see all these guys? You can call it a trend if you like, but I don't deal in trends. Yes, let me just finish this one point first. Here we have a compression going on in here, and once we do break into the compression, which is somewhere over here, we're going to get to the other end of the compression, absolutely. So the first real PA that we have here on this whole scale is the break-in of that. So yes, a break-in of that. Or just on this chart, I don't know what else is beyond here, but definitely on this chart, our MPL of this compression that we've got is over at this level here. So we'd find the kink on that, and that would be our target. So once we break in here, if price were to come back then to this level here, or that level there, or that level there, it's beautiful, absolutely beautiful. We do have a trade to bring us up to our target, which is over here at the MPL of our compression that we've got. So, okay. Amos wants to ask something maybe about this chart. Let me open up this thingy and give you... Oh, there you are.
Okay. Hello, Eve. Let's say you right there have a low.
Now, I think I can give you controls if you have downloaded the app for this. Have you downloaded the app for this, or are you just coming in from the browser?
I didn't. Just from browser.
Okay, so I don't think I'll be able... Let me just try anyway. Hold on. Boop, 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 boom. No, you're in the web, not the browser. I can try and give you keyboard and mouse. I'll just try this once. No. I tell you what, I'm going to send you this request, and
okay,
that'll be a request to download it. Just in case we get stuck, I'd like you to be downloading that in the background, and then I can make you or give you the mouse and control and all that sort of thing. For now, I will just tell me when you're ready to ask this question, and we'll go for it. You stay downloading there. I'll roll a cigarette because I ran out. I smoked too much. Boop, boop, boop.
Okay.
Good. Oh. Uh-oh. I see. He's moving over to the other application. Okay, give him a moment to come back. Hey, I'll get 2 cigarettes rolled, yay. All right. Oh, I see. Hold on. Boom, boom, boom. Let's go back. All right. So, Bobby now has controls. Bobby, I didn't give you controls.
Can you hear me now?
I can hear you, certainly. Now.
Okay, but I don't have the control.
Okay, now Bobby V has controls. I have controls. Right.
Okay, up.
Back.
Come back to this chart. Can you see?
Sure, you're at the low there, yeah?
Okay, there is a low. After break of this low, you have right there a flag limit. Okay.
You have yes, you do.
Okay, after break of this flag limit, you should have your QM level.
Okay.
Or just you draw a line. Is not flag limit after break the flag limit after break the flag limit.
All right. Well, yes. Okay. What have we got? I see what you're getting at here. Here we have a low, and then after we break that, we've got another kink inside here, and that makes for an upper flag limit. And if we break that upper flag limit, then we're going to go to the next upper flag limit. Now, the trouble we've got there is our next flag limit is extremely close. What have we got? We've got this guy over here. And that is our next target. Absolutely, that's our next target. And that actually lines up with something important over here. Do you see all these lows lining up in here? That is a compression. And where we break into a compression, you see we've got, I can draw my dotted green line there like I always draw on a compression. Price should have held on that compression and gone up and away and kept compressing, but it didn't. It actually broke down through. So where we break into a compression, we will find the kink of it, and that is actually a strong place for price to bounce from in the future. So not only once we've broken this upper flag limit here, do we have the kink at this left shoulder level over here, we also have the kink at this break into this compression over here, which makes for your first target. That's the thing. Your targets can be extremely close to you, or once you get PA, you can actually be in your target zone. And that's troublesome. Here you are for two different reasons. Once you've broken this, you are in your target zone. You're at this left shoulder level, at the kink of it, and you're also where we broke into this compression over here. So that PA is perfect. You can see that it did work. We did get our bounce there, but we came back down to these last highs, and that's all we can be expected. Our target is right there, too close. So we do not have any usable PA. It is PA, but it's hit its target, and that's no good for us, unfortunately.
Okay, thank you very much.
No worries, no worries. So yeah, we've got to look out for that. We've got to have that little bit of space, even if it's just half a pip of space between where our engulf goes to and the actual kink that is our first target. We can take our trade on a retrace. But if we've hit our target, unfortunately, that's it. We're stuck. So all right, here we do have a compression up over in here, and yes, had we broken into this compression, we do have beautiful PA, and coming back down to here would be gorgeous, keeping our stop loss beyond what this is a reaction to. And then we can get ourselves back up to our target over there, which is the tip of this compression. So now I'm actually teaching you about compression stuff as well, which is for another course. But yes, you see, everything ties together at the same time, so I really can't use one without referring to another piece of PA. So, okay, we're good there with this. Now on to the next one. So this was almost PA, almost really good PA, but not exactly quite. What would have been good PA is, as I say, the break into the compression and then a retrace. Okay, so next. Okay, let me hide this thing. What have we got here on this? Okay, we have where we broke into a compression here. That's fine. So that makes this a good flag limit to work from. So what do you say? You say that we have some PA here. We have an engulf down. You're looking at a diamond, I believe. Hold on. Yes, you're looking at a diamond over here, where you say we have a breakdown here, and then price comes further up into here and gets us gets our stops taken out, doing the diamond thing. Well, all right, that is something for sure. But I don't see it exactly that way. Let me go and see how I see it. Okay. So here we have a compression over here. All this is compressed, and then we broke into it here. So yes, this is a very good upper flag limit. That's absolutely fine. So what have we then? We have a compression down here. We have all of these guys taking out the MPLs of each other as they go. So that is a nice piece of compression. That's one piece of PA, essentially. One whole piece of PA is there. And then what do we get? We get a breakdown of it here. We're now breaking into this piece of PA. And if we break into a piece of PA, we're going to get to the other end of that piece of PA. So the compression goes as far as here, and your MPL of it then is your last point, which hasn't been taken out in that compression. So that's this left shoulder of it over here. So our target is there. We do have an engulf once we're here, and then we can have our entry up at the what's it called, at the left shoulder level, which is great. It's lovely. We can have our entry there. Our stop loss beyond the high, absolutely no way, however. Absolutely no way do I have our stop loss beyond there. Our stop loss has to be beyond what we're reacting to. So, okay. See, this is why I'm really glad that I got you guys to do your homework. Really glad, because I might not, well, okay, I did say it, that we're not supposed to have our stop loss beyond the highs and the lows, that we're supposed to have it beyond the flag limit that we're reacting to. Having said that, it is good to say it, but I'm so delighted that you guys are able to see that you did make that mistake and that it's something you're never going to do again. So if you know absolutely everything else about price action and you didn't know this, then I'm really glad you came along, so that at least that's one thing which is absolutely fixed. You will not be putting your stop losses beyond highs and lows. It's just propaganda. It's rubbish. You never do that. Give yourself enough space. Okay, that is a good one. We do have PA there. It's not exactly the PA, or it's not the PA for the same reasons as the poster put it, but it is good nonetheless. We do have a trade. We have a trade from here with our stop loss up there, and it then comes down to here. And it is a really nice place. I mean, here's our target here, our first target. But look, these orders over here at this left shoulder still haven't been picked up. So what do they love to do? They love to fill ranges, absolutely love to fill ranges. So there's no reason not to hold some of your position until it comes down to this left shoulder over here. And this left shoulder then, it has its kink inside here. You see we've got this candle here with its spike up, and then it retraces back down to there. Somewhere inside there is the best place really to fill this range. So yes, you can take some off over here. Your entry, as I believe, is around there. Your stop is around there. So the R is greater than 1 on this, I believe. And then you're still thinking about filling this range, because they love to fill ranges. They love to come back to left shoulders and do their thing. And that's what they do over here. They actually bring it further. And then look what happens once they actually bring it to the left shoulder. And the left shoulder, as I say, isn't to the pip. It's the kink. And that kink is inside. From the top of that candle to the bottom of this candle is definitely at least the kink on this. Now, that over there, that candle, once it got up to here, it might have even come down further than the low of this candle over here. So you could find that the kink you actually have is much deeper. But what did we do? We came down to the kink anyway, and we bounced out of it. And did we turn at RS exactly? Absolutely, we didn't. We turned at the end of this piece of PA over here. It's the MPL of that, which turned into the left shoulder of these guys over here. And the left shoulder is fabulous. Now, one of you did some homework on left shoulders, and I'm going to go to that in a minute and show you how just wonderful it is. Okay, so it did its thing. So yes, we have PA. We're in the compression. We're going to the other end of compression. That's brilliant. You can set your full target there, or see that there's a very strong chance we're going to be filling up this this range that we've got. And we did, and we actually went further. So yes, yay, good. So what have we got on this one here? Hold on. We've got a supply over here. That is fine. Okay, you're saying the QM is over here. Let's see if it actually is. Now this is over there, I believe. Fine. So, okay. What have we? We have this high over here. That gets engulfed by this over here. So then this becomes a lower flag limit that we've got there. Now our lower flag limit gets engulfed. Where does it get engulfed 2. Well, here is a compression that we've got going on over here, and it breaks in somewhere inside that candle. So our target after we engulf this is actually where we break into this compression over here. So it's inside that candle. So it has in effect hit its target over there. It has hit where we broke into this compression. So it does look really nice. It does look really, really nice. But unfortunately, it did hit its first target inside there. Because when we're looking for targets on trades, we look for PA. We look for price action. Now, price action can be breaking a high. It can be breaking well, actually, it can't be breaking a high or a low. It's about breaking a flag limit, an upper flag limit or a lower flag limit. That is price action. Price action is breaking into compression. Absolutely. So, I mean, this is you've got your compression here. You've got supply reacting to supply, reacting to supply, reacting to supply, and then the supply doesn't work anymore, and we have a kink on that, and that makes demand. So yes, breaking into compression makes for PA. So once we have PA, which is the break of this is the SR flip kink here. Our next target then is our break into our compression over there, and that's what we got. But now later on, we actually came and we broke that over here. Now, is that our first target? I don't really see that as being our first target. That doesn't line up with much for me unless it ties in with the kink of this over here. This is our high over there, but that actually ties in much better with our kink on the break into the compression. So it seems to me that once we're down here, we actually do have PA and we do have a Quasimodo trade. It's not great though. I mean, our stop has to be not beyond the high of this. Our stop has to be beyond the high of that over there. And then our target then is on the, oh, hold on. Oh, I've drawn something. Have I drawn what the answer to this is? Okay, so our stop has to be over there. All right, good. I agree with myself. That's great. This is engulfed over here. That is our target there. Our target then is broken. And we do have an QM trade on from here. We could have a QM trade from the high of this if we like, but that's very close. If we find the kink tying in with this one over here, then we can have a trade, and that seems to be working quite nicely. And then it brings us down. Oh, excuse me. I need to see more of this chart. I really need to see more of this chart. But it's going to bring us down to pre-compression over here. And I should imagine, actually pre-compression is here. This is really nice what we've got here. This is our clean set of orders inside here. That is a beautiful target after we have this engulf over here. It's pre-compression here. See all our compression there, and pre-compression is a gorgeous, really beautiful target. So there's where we broke into compression on that side. Breaking this over here breaks us into compression on this side. So just before compression is a fine target, and that's what we got. Now, ideally, it would have been beautiful to make this piece of PA come all the way back up to here, and then break these highs over here, just that little bit higher. If there was an MPL over here, which hadn't been touched yet, but you know, we really are at the MPL already, so maybe a diamond isn't what we could expect there, because you know, we're really at the MPL. So over here, it would have been gorgeous to come back to after making that piece of PA that we've got there, right back up to here. We do have a trade then down to pre-compression over here, absolutely. So yes, this is nice, but not exactly perfect. So, okay, onwards. All right, what have we got here? Does this lead on to something else? No, we get something new over there past that. Okay. So what do we have? Should this thing be here at all? Right. Okay, I haven't got all the history that we need on this, but let's say that this is a lower flag limit. Then we do have a break of that lower flag limit, and there must be something, really there must be something over on the other side here. There must be a left shoulder over there for this to react to. Now we do have a kind of a compression here, and pre-compression is a great place to bounce. So before this goes and gets inside there, it can bounce really, really well on this. So essentially, if we have a left shoulder lining up over there and we have this pre-compression over here, it is really great for taking a trade down to the next place. And the next place now, whoever did this piece of homework did it really well. Here we have the last high over there, and there is the kink. That special kink that I've been talking about. Very special, very important. Just hitting this in itself, just hitting up there, is the same as hitting the RS over there. It's just less visible. So it's really perfect, absolutely wonderful to be able to take it there. So yes, this is a Quasimodo trade, so long as we have a left shoulder, taking us back down over to there. That one is really, really nice. But what have you got on this? Okay, you've got a high and a high and a higher high, and now you've got an engulf into this. Is that good as well? Well, okay, I see where you're coming from with this, actually. I like it. We have a compression going on in here. You see all this? This is a compression going on in here. Each low is taking out the MPL of the low before it. So fine, that is good. You have now broken into this compression, and in breaking into a compression, you're going to go to the other end of the compression. The other end of the compression here is the MPL of the compression, which is there. So it's this point over here. So yes, this is M5. I would look into wherever I could to find the kink on this side of this spike correlating with that low over there, and that is a great target. So this is PA. This lower low is actual PA. If it had have come down as far as the kink tying in with this straight away, it would be PA, but it would have hit its target. This didn't hit its target, so wonderful. You have, whether you meant to or not, you have drawn us up an absolutely fantastic Quasimodo. That it breaks into the compression, great, and then retraces up to the left shoulder level. So this left shoulder level is over here, the kink is here, this is the depth to retrace after it broke down, and this is as far as it advanced. So your kink really is here. Your target then, you could be taking your first entry here, because here is part of the kink which ties in with the left shoulder. But of course, further is better. The MPL on this kink is over here. You see this left shoulder over here and the little fake out above it. That is where the trick was played in this kink, and coming and taking your touch trade there. Well, it worked absolutely beautifully, didn't it? It went over there and then came down to the other end of to the MPL of that piece of PA there, of that compression, and it hit its target. So gorgeous. That is absolutely fantastic. So very well done, whether you meant to get that or not. You see, you almost got it right. You said your target is there. Your target on the break of this is there. So yes, you do have an entry there. That's great. For this one, this is a completely different trade. You've broken into the compression. Your target is over there. Wait for price to get back over to the left shoulder again, and then come on over to your target. The target breaks nicely, and that's PA again to go to the next place. So this set of orders has already been taken, or this left shoulder has been taken by that. So maybe the next place is under there. This would be a really nice place to take a trade from. This is where this faked out to get to over there. So that would be lovely, and that actually got used in the past, but it didn't make any PA. It just came and took out the next demand, and that was exactly where we broke into this compression up over here. Look for symmetry in the market, you'll find it. It was great, but it didn't make PA, so there was no trade to be had from there. This, though, was pre-compression, probably on the left shoulder level over there, and worked very well. So there's two trades to be taken in here, both gorgeous. One is from here or here. Remember, this is the kink. This whole thing from there to there is the kink. The best price, of course, is the best price. It is the MPL of the kink up over there. At this MPL, trade your way down to this point over there, and then see what happens. It actually got broken over here, which is great. You could even stay in that trade if you liked, and there's nothing wrong with taking another trade, so long as your full 5 or 6% that you're risking on all your trades hasn't been taken up. You got to keep yourself some margin. So long as you're still within your money management, you can take this next trade over here at pre-compression and bring price over there. Always your stop loss is going to be not above your higher high, but above what it's a reaction to. Always. So did I just miss some chat there, or are we cool? Oh, we have somebody who needs to go. Okay. Okay, so Scooby was saying, I was really questioning whether the source of engulf trade was a better RR than the touch trade. I don't even know what chart that's on now. That's 2 minutes ago. Oh, it's on this chart. Okay, Can you talk to me? I don't remember.
Yes.
You can talk to me. Excellent. Yes, yes. And have you downloaded the Yokibob? I think you have. So I can give you control now. I should be able to give you control. Give keyboard and mouse. Okay. Let me just close this chat so I can see what we're dealing with. Okay, now you should be able to just... Yeah, you're good.
Yep, I've got it now. What I was trying to get at with that trade was the stop loss for the touch trade was going to be quite high.
Sure, sure.
And the risk reward on it wasn't going to be good. So I thought that by waiting for the source of engulf, the red line there could have been the stop loss in that a very tight one, just to make a better risk reward.
It can be, but you have got to get yourself into a much lower time frame, much lower time frame to be able to work that out, because price can always come up. I mean, looking up here, we have a lovely supply over there. Now, with something that pushes up as strong as this, we have a very strong push up over the highs over here, and then we have a base forming over there. Surely this base is still going to be really attractive to fill trades later on, sometime. That, you know, as soon as price has made an engulf down, it usually should come all the way back up and fill the very last orders that are in there. I mean, even here at this little high over there, that's really attractive. Surely price should have come down and made its engulf and then come straight back up to there. But it didn't. That means that that's being saved for later on. And it was saved for later on. Price did come there, but it actually did even better and did a full diamond on this thing over here and did a wonderful job. So yes, it's nice to think that you can have your stop loss up over there, but that can be taken out so easily. Really, it can be taken out so easily. And what do we have here? We have a left shoulder over here and a high over there. So this is a lovely trick that was played over there. This is a gorgeous flag. This flag here says that whatever way price breaks is the future direction of it. Price broke up, so they're thinking that's the future direction of it, but it's not, because price breaks immediately straight back down. So this is a gorgeous trick. So then once price got into this compression over there, it should have come straight back up to that point. That is the MPL. That is where the trick was played. It absolutely should have come back up there straight away. So, because it didn't, now this is another really important part of understanding the market. Because price didn't come back and make the Quasimodo level over there, what you've got is a level like this, which is, it's kind of a rubbish level. They make it look like it is a very strong support. Really strong support. Oh, no, sorry, resistance. Yes, because it's holding price down. Makes it look like it's a really strong resistance. Now, this is another lesson for a different class altogether, but I'm going to give it to you now anyway, because that's what I want to do. Is they want to make what we call a BSZ. It's a, you can call it a BS zone for perfectly obvious reasons, or you can call it a breakout and stops zone, which is wonderful because this is a strong resistance, and when price gets up to this resistance, it should hold it. And if it doesn't hold it, then your sellers that are in here, because your sellers are going to be in at that, they'll always sell. Supply sellers will always sell at supply, and you do have a supply here. So their stops are over there, and then above this supply, you've got your breakout traders. So your breakouts are your B, your stops are your S, you've got your BS zone, you've got breakout traders and stop losses going on in here, coming up to the MPL of this, and it's great for hurting retailers. Absolutely brilliant for hurting retailers. So this should have come back up there. So to have your stop above here is very dangerous when there are still free orders up there at the origin of the same move that you're coming from. So be very careful with that. If I were to have a tight stop loss, you know, I could say I'd have it just above here, but that's still too dangerous again. I'd still have it above there. If you want to win every time, you're going to put it above what you're reacting to. But if you can find, now you're on M5 there. This is an M5 chart. You could find wonderful reasons, maybe in the M1 with M1 PA, to put your stop beyond this. Now you can take an M1 trade. An M1 trade is not this M5 trade. You cannot work with the same targets on this M5 trade on the M1 trade. You just can't. You're going to have to work with, if you're working with smaller stops, you have to work with smaller targets as well. So you'll be in the M1 going from level to level inside here. You'll see you've got a compression inside there. So where that compression gets broken into is a flag limit. And then where it retraces to, that makes the flag limit. And then this one over here, this breaks there. So your flag limits are all really close. There's one around here, there's one around there. And there, what you've got to work to and make sure that you're breaking them all the way, because price can so easily bounce off any one of those M1 levels and come back and take out your entry and go for the MPL above very easily. So you cannot run this trade on this scale with a stop loss as tight as this. You're going to have to give it all of that. But you can go into, as I say, into the lower time frames and go with it. But yes, this is a nice trade. It is a very nice trade, and there are some gorgeous trades in it. Now, what have we got over here? Okay, this is our, as far as I see, I haven't got all the rest of history on this, so I can only work with what I've got. This is an RS over here. Here is the kink. That did break over there. Now, with that break, you're going to be expecting price to get either to the left shoulder of this over here, the kink of that, and I don't know where exactly that is, or you look to the other side of this. What you've got is this low over here, and then that gets broken down. It looks like price is going to go away forever, but it actually comes and breaks back up again. So this over here is a lovely, lovely place to be a target for the break of this over here. So in finding that, we draw our line across from here, and then we draw our kink, which is presumably, now I can only presume at this stage, that it is from the top of this down to the bottom of that. But we did break up here, and this is an M5 candle, so this might have retraced anywhere back inside that candle. Absolutely anywhere. Did I actually draw in what's to be done with this? No, we're onto a different one there. Okay, so this is our kink on that. So in breaking this flag limit there, we are going to this flag limit over here. We didn't touch it, so we actually do have a trade on this. So we do have PA there. Now we can be getting in at this MPL over here, tying in with those higher highs, or we could be looking further up here for our entry. But what actually happened in the end was we got a diamond up above here. This is gorgeous, absolutely gorgeous. If you missed your entry on this, if you missed your entry at that price over there, you're thinking, great, price is up here, you can get in an entry over there, and that's fine to take in an entry over there. Even better than that is above here, you have your stops and your breakout traders in there, all buying at a very, very high price. When everybody else knows the price is going to come down to this kink over here, that's an extremely high price to be buying at. Wonderful for the ITs, and then they can use all those buys to sell their way and sell big all the way back down to the target over here, which got breached and breached really well. Now, okay, somebody else is typing. Gotcha. Yes. It was a wonderful diamond trade. It's an absolutely beautiful diamond trade. So there's a few trades in there, and they're gorgeous. Okay, so next. We're about to run out of chart examples here, which is going to have me sending you away for another week to do even more. But that's great. Now this one, I love this one. I absolutely love this one. It's a complete pain in the ass what actually happened here, but as an example, it is beautiful. Now, what do we have? This setup is a bit unconventional in that the flag limit I've marked, the green rectangle there, is not the break of the low, but rather the break of the failed QM level to the left. Now that's not unconventional at all. A lot of you know that I said there is a big change to the or a big but little change, or a little but big change to the way the market is being manipulated nowadays. And I said, I believe, look for a change in SR. Now, Perfect. Brilliant. This is that change in SR that I've been talking about. They used to just work with the kink of the SR, and that's all that they would do. That where you had this SR here, you would have the kink on it there, and that is the most important part of the whole flag, or this side of the flag. They changed it. And they now so often go to the ignored Quasimodo level, the ignored left shoulder, rather than the RS or SR itself. And of course they do. I mean, here is the left shoulder there, and there's where it got broken. Now, when Price got down to this left shoulder, surely it should have come back and filled the range. Surely it should have bounced off that left shoulder and come back up to, let's say, up over here or even up over there, fill that range again. It didn't. It didn't even bounce its way back over to the last SR that we've got over here. It didn't do a damn thing. Should have done something. Absolutely should have bounced at least back up to here, but it didn't. That makes it a very, very interesting place. Really special place. So yes, it is unconventional, or it was unconventional that you would look at this left shoulder level, but it isn't unconventional anymore. It is. Some of our traders in the academy, that's where they will look. They will no longer, okay, they'll be aware of the SR, but their favorite place is over here at the ignored Quasimodo level before the SR or before the RS. So I'm so happy that you found that one. Had you not found that one, I might not have brought it up. So I'm really glad for your sakes that you did. You've just found out something really important here. It's that so often they want to confuse you by breaking the SR and turning Price then at the Quasimodo level or at the left shoulder level, which has failed on the way to it. Beautiful, absolutely beautiful. Now, what have we got on this? Do I have another chart after this that I've marked up myself? I do, so let's just go back and see what we've got. Okay. So here, what you've got is the failed Quasimodo level. Great, this is the kink on it. And you then have an engulf. Now, I think I'll have to look at my own chart here further on and see. Right, what have we got? We've got this level over here. That got broken up there. Here is the kink on it. So yes, we do have an engulf here, an engulf of the kink of this SR, and that's great. There's the kink of it, and here we get it engulfed. So okay, then Price comes back up over here to the left shoulder level, and you can take that. You really can take that trade. It is absolutely beautiful. And then you've even got your target nearly marked perfectly on this. You have it there, which is great. It's really thinking along the right directions, but it's not. Just look back at my other drawings that I gave you and look for where these highs actually got broken and retraced to, and you'll find the actual SR. And that came and hit this absolutely perfectly. Now, I love this. Absolutely love this. This is a really, really perfect trade, except that it's a crappy trade and it's not perfect at all, and I hate it so very much. What we have here, I think this was on a daily level or something. Yes, that's the daily up top, isn't it? I think this is a daily chart. Yes. And what did we do? We actually came and we broke the daily level by, on my charts, it was by 1.5 pips, I think it was. And that actually negated the trade. That, unfortunately, terribly negated the trade. And I looked back over here to this, and this is as perfectly marked as I could get it, and there was no weekend happening inside there, so there was no way that I could actually bring up this green box another 1.6 pips to keep us within. It just broke it. Simple as that, and that sucks. And what we have to do is treat that as PA. Unfortunately, we have to treat it as PA, and that sucks. Now, of course, where is our target for that piece of PA? Well, it's going to be over here at this little level over here. So then we'll find the kink on it over there, and it seems to me we've actually hit it. So what does that mean? Well, it means that we still do have PA, which is great, and we can take this trade. Very simple trade. This is an M30 trade. We can take it down as far as here because, okay, our stop has to now be beyond the kink of this over here. Makes it a little bit worse, and our kink is going to be up over there, so it gives us a giant stop, and I think it might actually negate the trade in that we're in the next zone. We have broken this zone so it does negate it, but we are in the next zone in our target area, so then it gives us a different trade, which works, but at the same time, the R is too bad on it, so it doesn't. But this is going to work. It is going to get down to this target level over here. Hold on. It is going to get down to this target level here, not before it can break this guy, but before it can break the next kink above. So that sucks. So it is a fabulous trade. Had this not broken there, then we would have been in an absolutely beautiful, beautiful trade with a seriously tight stop loss and a really high reward on it. So yes, take away from this that it's the failed Quasimodo level is a very special place. And this is a class on Quasimodo levels. So how can you know all about Quasimodos without knowing about failed Quasimodos, without failed left shoulders? Very important, very, very important. So I'm really happy with that. Okay, so next, what have we got? We have a diagram in the homework, and I think I love it. It looks like something that I would have drawn myself. Let me just double check on it. We want a flag limit 1. Okay. So here we have an upper flag limit getting broken up, and then it hits the next one beyond, so that turns this into a lower flag limit, and then we have an engulf of that. That is absolutely beautiful, really gorgeous. So we can get ourselves in on a trade on here at this level over here, or we can get ourselves in a trade at this level or that level, or even further up inside there, or we could take our trade over here. But what has this wonderful student done has shown us exactly what I was talking about the oh, hold on a second. About the diamond. That yes, we have a Quasimodo level we could be trading from here, and it's wonderful to do it. We could get our entry there, or we could get our entry there, or we could wait for our MPL over here, which is the very best price that we can get on this, and it's absolutely beautiful, and I'm so glad you drew this chart. It's perfect. Absolutely perfect. We can get a small retrace, and we can be in on that small retrace and bring us all the way to our target, or we can be totally extra cool. Don't worry about this one, whose R isn't very good. Wait for price then to get up to the diamond level, to the MPL of our kink that we're working with, then get in for an absolutely massive trade. So the diamond does make for giant, giant trades, and you could be easily a person who sees every Quasimodo level, but if the Quasimodo level isn't up at the MPL level, you could be just the person who waits oh, excuse me who misses the Quasimodo level and waits for the diamond. The diamond doesn't always happen. Very often you'll go to your target before the diamond happens. But if you want those best trades, those ones that make you look like a trading god, you will wait for those diamond ones. Wait for the very best possible price. And if of course it did go to the target before it came up to the diamond level, it's no loss. You didn't lose anything. Yes, you didn't win a little bit, but you didn't lose anything. So if you can have the patience to wait for the very, very best trade, which is that diamond, go for it, wait for it, and watch it, and then just be so happy that you took it. You can be in on a full position on this, and here's your entry, there's your stop, it's really tight, and your target's all the way down there, so you can get many times R on this. So I love that chart, absolutely love it. Thank you so much for drawing it. So, okay, what have we got here? Alrighty. Now, what I don't see here, I think, is a Quasimodo level. Did I put anything on after? No, there's a different chart after it, so I have to explain it in this one. All right. Okay, so what's this? This is an upper flag limit that we've got, I suppose. Then there's perhaps another upper flag limit, and then price touched the upper flag limit there, and then our lower flag limit is this guy over here. So it's from here, how far it retraced after it broke the upper flag limit, as far as how far it advanced. So this here is our lower flag limit. So on this scale, we have no PA at all until this flag limit breaks. So I don't particularly see on this scale a Quasimodo. So what have we got over here? Maybe there's one over here. Let's have a little peek. Okay. So here's our left shoulder level over there. This ties in with it over there. And that in itself is a lower flag limit. That's fine. That's working really, really nicely. Then we have a break of it. And where is that break going to go? Well, we do like symmetry. We'd love to see the price has bounced from this over here and is going to come down to this end over here. That would be really, really nice. But you're asking a lot with that. And anyway, I'm digressing and moving away from this particular piece of PA that we have. We're in a much smaller scale piece of PA right here. Okay. So yes, this is the lower flag limit. Now, when that breaks, it wants to go to the next one. What do we have? Yeah, we do have this. And why I'm looking at this is for the symmetry on this, and it is still a nice valid place. Okay, forget about that for now. Where is much closer? Is this of any significance? Well, we did break into our compression here with that. That kept us down. So with flag limits, this would be an upper flag limit, and then where it breaks would be a lower flag limit. And then where that breaks down, it makes an upper flag limit here. And then that breaks up and creates a lower flag limit over there. So yes, over here, we do have a lower flag limit. And with the break of that, we are going to be looking for this box over here. I do see that we've got price action to bring us to that box over here. So it would be from the top of that candle down to the bottom of the same candle there. And if this didn't touch that, which it didn't, we do have a trade. So then we can get back in at this Quasimodo level over there. We can put a sell in over there. And we have to keep our original stop loss on this. We have to keep above here. You've got that marked really nicely there. That's good. Our first target is this point over here. And it hits it nicely, and actually breaks that kink and brings us down to this left shoulder level over there. That's gorgeous. And then actually brings us further down, fills this completely, and then goes on and hits the other side of this guy over here. So what have we got? We've got a compression over here. See these guys? That's a compression. Where we broke into that is important. So somewhere inside this candle is a wonderful place to actually look for some PA. Now, maybe the highs of this are over here and the high got broken, and maybe that is a kink. So really, if the high of this is here and we break this low over here, the next target for that is this kink here, which is the RS. And then if that kink breaks, we are looking for where we broke into the next one, and that's here where we broke into that compression. So everything's really tight. But if you can find a bit of space in between any of these, you do have your trades. So yes, we did have a trade in there. That's really nice. And if there was just that bit more space on any of these, we could have gotten further trades as we go. That one here broke and went straight into its target over there. That one broke and went straight to its target over there. Actually, after that breaks, now you're looking to the other side of this. You're looking to the left shoulder of this for your next target. We'll try and find the kink in here that ties up with it. We don't know exactly where the kink is in here. It's somewhere inside this candle here, and that's exactly where we went to with that. So had we broken this one, our next target is that one. So had we broken the low of this and then come back up over here, or even broken these highs back over to this proper MPL over there, we would have a gorgeous trade all the way down to the kink, which is somewhere inside that candle there. Really, really gorgeous. So yeah, I like that chart very much. Really, very, very much. Okay, on to the next one. Okay, what have we got here? I think I've drawn some stuff on here. I've got these thick things. Yeah, they're mine on top of it. So what are we looking at in here? We seem to have a diamond marked in here. So let's work with that for a moment. Here we have a high over here. Its kink then is over here. And that makes this a lower flag limit. That one breaks there. Now with the break of that one, we are going to be looking for the far side of this, the MPL of this, as a target. So we broke in there, and then we came and we could have quite happily, no, now hold on a second. I'm not sure about how this was marked. I have no information even what this pair is or when it was that happened, so I'm not sure. I can only assume that maybe this upper flag limit was drawn a little bit too shallow and that it should have been to here, because we like our diamonds to actually hit our level before they actually make our engulf and then come up and take out the high or low that we've got there. So I would like for this flag limit to be over here so that this has touched it, because I do like to get my PA once we've touched the flag limit and then go deeper into it afterwards. So yes, we are relying on this to be that little bit deeper. But yes, once we have this, our next piece of PA, then it's pre-compression. Here you see all this whole stack of stuff inside there. It's not all a complete compression, but it is stacked zones, and stacked zones work so much like compression. It's unbelievable. So right, we do have our piece of PA there, and that is our target there. So we could be getting in at, let's say, that left shoulder level over there. But if we see that we're not deep enough into here, maybe we could be waiting for all these stops to get taken out above the high and actually get in at our diamond level over there, and then come and take our trade all the way down to here. Lovely. It is clear PA. It's clean PA. There's loads of space for that fake out, and this is why we do not have our stops just above the highs or lows, because they're wrong. We've got to be putting them beyond what we're reacting to. So, okay, what have we got over here? Right, we have this in here, which is kind of the Quasimodo level for that over there. That's fine. Alrighty, and then can you make this an upper flag limit? Well, okay. With this getting broken up over here, this has broken up over there. Then we've got our next target up over here. So we do have a flag limit here. This is a lower flag limit between there and there. That's how deep it reacted after it broke this one, or how deep it retraced after breaking this one. And that's how far it advanced beforehand. And then, of course, it went to the target. So this here is a flag limit. So our first bit of PA on this scale is to actually break that flag limit down. And that is here. So this, to me, is not price action. It did not break the flag limit that we're working with, so it's no good for me at all. So I can't really use that on this scale. So what have we got inside there? Okay, here we have our left shoulder. If this is drawn properly, then that's absolutely perfect, how this came and reacted to the bottom of our flag limit over there. And then we got our engulf into here, and we do have a target over here. We've got compression there, we're broken into it, and here is our kink on it, so that's fine. A break of this is good. With a break of that, we are going to the next place over here, which is over here. It is the MPL of this flag over here. There's nothing in the way, so it's a really great place for us. So yes, we can get in then at the left shoulder level. Over here is a very good place to get in. This left shoulder level over here, anywhere before this little spike over there, I suppose, is good. But then, of course, your stop loss is going to be beyond this over here. So this is the first place I'd be looking to enter. I wouldn't want to enter any lower than that. But then you've got this point over here or that point over there where you could be entering quite happily, and then letting price come down to this target over here. It's the kink of that, and it's gorgeous the way it actually did come down there. Very, very simple. Now, what else have we got after this? Okay. Do I have notes on this one, or do I make notes from here? I do have notes. Okay. Alrighty. Oh, come back. Right, so this is Euro USD. We have, I don't know if there's a low on this. That must be an MPL or something. I'm not sure exactly why this is drawn here like that. If there was a left shoulder level, if there was a high over there at this point, then that's great for drawing that. Right now, I don't exactly get it, but it is, you can see it is supply anyway. Now, what have we got with it? Here we have a lovely flag. We've got our low and we've got our high over there, and we have broken that over here. This here is compressed inside there. Each has taken out its MPL. So now we've broken into compression. And really, essentially, the target for that compression is the MPL of this over here. It's right there. And we really have hit our target with this. But then we go on up to the next one, and all I can assume is that this is drawn properly. So then we have price up at this level over here. We then do have an approach flag limit over here. And our target then on the break of this approach flag limit is where we broke into this over here. It is our kink on this, and that's somewhere inside that candle there. So we actually do have already our target hit on the break of this. So is there anything else that we have? Well, okay, price came and it broke this one, and now it's looking further down. This here is okay. Yep. No worries. I am recording this, so the recording will exist. Yes, and I have enough space for the recording as well, so that is a good thing. All right, you're not missing much anyway. I'll be finishing up in a couple of minutes. Right. So this is in the middle of space. It hasn't got anything to do with anything here really, so I'm not loving this as a target. What I do like is this over here. This is a lovely left shoulder over there, tying in with a very clean demand there where nothing has been taken. Those orders, once price came up above here, it should have come back and taken out those orders and then moved on, but it didn't. So this is still very clean and clear, and it's a gorgeous set of orders. Now, what else have we? To look for symmetry in the market, we will be looking at this again because this is the foundation of everything we're working on here. And I would look to the bottom of this over here, see if there are any clean orders at it. And there are clean orders at it inside here. They are really, really nice. So that's another place to be looking for price to go to. With that, you would see that we have what we call the BSZ there. This is this held up price. This made support, and then it was told to make support again over here, and then that support broke, and it looked like with breaking support, price is going to go down and down, but it didn't. Price came and made its way back up again. So that BSZ there is an absolutely wonderful place, a wonderful target for price. So it's really inviting. So now we have this piece of PA. It breaks this one. Our first target for me is this over here. So what have we got? We've got this, and then we can go and come to this left shoulder level. We could go to that left shoulder level as well if we liked. That one there, we could find the kink on it, and we can take our entry in that kink, which is here. So I suppose it would be there at the MPL of that kink. Puts you under a little bit of pressure, however, because it's still a perfectly valid place to take a trade, but price didn't ever come back to this lovely MPL that we've got over here, or that lovely MPL. Oh, that one, of course, did come back to with this. This is more of the BS I was talking about, by the way. This is price coming down and breaking a low. It should come back up to the MPL level again, but doesn't. Like this. So then it creates resistance, makes it look bearish over here. We get lower lows, then comes and takes out all the stops over there. And with taking out all the stops, you have loads of buyers at a really high price to sell to and then bring price down. That's what that's all about. Gorgeous stuff. Give me one moment. And then I will be continuing with this. No, sorry, I've got a coughing fit. It's hard to get a decent drag of a cigarette when you're coughing your lungs up. You must give up coughing. Boop, 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 boom. Alrighty. So where are we? Okay, we have our clear targets on this, and that one is great. Come up to the MPL over here. Now, ideally, before this compression over there would have been a great price, but you know, it very often doesn't come straight back up there to this pre-compression for it. But what you do have is this lovely BSZ from the past, and it's fabulous. If you can find the kink, the kink is inside this candle there somewhere. Find the kink and take your trade from there. It's brilliant. We take trades at places where there have been tricks played in the past. These guys, this should have retraced back all the way up to the MPL. It didn't. instead it created 1, 2, 3 times resistance, and breaking that resistance and then shooting back through is a wonderful trick. Where that trick was played is where you want to be taking your trade then to go down to your target. So that's perfect. Over here is your first target. You can take everything out there, or you can see that we're in one big PA over here. To see this whole thing, it is one piece of PA, it's one flag, and you could be looking for price to complete, come back down to the other end of that flag, which is over here. You'll see the BSZ again over there. You've got support, support, support over there. Those guys, once this had engulfed there, it should have come back to this MPL over there, to that MPL over there. It didn't come back to there, it just faked it. It just came close, 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 so that later on it could come back to that MPL and then decide what to do, taking out tons of stops here. On the way. So it did take out tons of stops here, and it was great for the ITs. To actually get in, and away they went, fully loaded, back up for filling this range once again. So there was a nice trade there, very simple, really, really simple trade, and they're the ones we should be looking for. Okay, what have we got over here? Okay. Is this the one? Okay, we're at a supply over here. That's fine. Here we have, I don't know exactly what we have here, but we do have a low, and the break of that low should then go to its next target, which I suppose should be the kink of this, but this left shoulder here shares the same kink as this low. So now we have broken that, and we're going to get down to the next place. But I would be looking over here for the high of these guys as the next target, and where the kink is for that. I'm not sure exactly where it is. But what we do have here is this guy, and we could be looking for symmetry inside there. So we have this, we have the upper flag limit on that getting broken, or the lower flag limit on the breakup of that getting broken there. So that can bring us down into here very easily, into this next high that we've got here. We've got this BSZ again. And it is a nice place. We have clean orders inside there, so it is nice. Now I need a bit more history on the left to see what we're dealing with here. But we are now in this space. We've broken into this flag area, and for symmetry, we should be coming back to the MPL of it at least. The MPL of this guy is over here. There is the left shoulder on this, and it is a really great place. So we've broken in there. Maybe I would have been waiting further up inside here at this left shoulder level inside there. But you see, the kink of this left shoulder level is all of this. It is from the depth of the retrace to the furthest advance that we've got. So our kink is this whole thing. So as much as we like to actually get in on the MPL of a kink, sometimes we get in at the beginning of a kink, and that's as far as it goes. So there is to be a trade taken at this kink here. If you really want to get in the trade, do take it early in there. The stop loss, of course, is going to be beyond. You can only put the stop loss here in a much lower time frame case, not in this one at all. It has to be beyond there, and we can take that trade at this kink down as far as this first set of clean orders that we've got in there. So that works. So then what? We've got something drawn over here as well. But I don't see this as significant because I don't see that as, what is it? Here is our kink, here's our MPL in there. Yes, for me there's no PA until this guy breaks. This is where we broke into that compression over there, so there is no PA until that breaks. Once that has broken, then I would be looking at where we broke into this compression here, right there, inside there, and you know, that was really on its target already, so it's not ideal. And then what have we got beyond that? We've got this compression over here, and we can tie this in over here to the MPL of this kink. This is the kink where we broke into that compression. We can get our MPL over here, and that as well is another gorgeous target for price to get to. Essentially though, price came and made its way all the way through. Now if it had have broken this and not touched that, that would be a lovely thing. We could get price back up into here. Before this compression, we could get in, or we could be waiting for this MPL over here to be taken. It didn't hit actually, so we would have missed that. but we can get in on a lovely trade and bring ourselves down to there. And here is the best place in there, of course. And then after that one, you've got the left shoulder over here, and you find the kink in it there, and that is your next target on that. So yes, we did have PA on this one, and it worked. That one, though, isn't for me PA. I'm not loving it at all. Do we have more? We do. I know we're running out soon enough, though. Okay, what have we? We have a compression up here in this flag. You see this compression? Great. So this is pre-compression, and it is a really nice place to look for PA. It's an absolutely gorgeous place to look for PA. So what have we got? We have price going deep up into that pre-compression over there, and that has broken this high, so it's taken out stops, and it's taken on breakout traders and whatever. And this is the same thing again. This is the same BS that you get. It's price not going deep enough on return here, so it makes resistance, makes resistance over here, makes resistance over here. So everybody knows that this is gorgeous resistance. So they're going to be taking their trade at this, and they're going to have their stop losses right above the high, because that's what everybody does, which is absolutely wrong. And that resistance trade then gets killed. Because they're going to break it up into this pre-compression there and come down and fill the range from there, using all the stops to load themselves up. But is that what we're dealing with? No, we're dealing with something down here. Okay, we have this big flag over here, and then that gets broken down over here and comes down to the next one over there. So that makes this our upper flag limit here. So that's what we've got marked. Now we broke into this new zone, which is gorgeous. Really happy to break into this new zone. That's great. And that gives us PA. Where's our PA going to bring us to? Well, okay, we've got a few kinks over here, but they are all tied up in this kink over here, and that actually gets broken by this. So we have extra PA there. All these targets have now been taken out. So the first target is gone. So now we look for the next target, and we look over here, and we look to pre-compression over there as our first target. So where do we look? I have this left shoulder over here. That's my cleanest place there as a first target on this. I would pretty much always draw my first target there on this. So that's perfect. We do have a brilliant trade. Now, what have we got? We have broken this, we have broken that, and our first target is up over here. I'm loving that. And then price comes and retraces back to this left shoulder level over here. Now, it could have retraced to this one over here. It could have retraced past this one to maybe another one over there. So we have to have our stop loss beyond this. I suppose that, you see, this pre-compression thing brings me into the compression lesson, and there's a lot to learn on compression, really. Well, okay. You could say there's a lot to learn on Quasimodo as well, but you've just learned everything that there is to learn, but you've got to make it nature. So there's a lot of reiteration involved and a load of examples involved. Pre-compression, just know that it is strong, because compression in itself is strong. So once we do go into the compression lesson, I'll teach more of that. Understand for now that pre-compression is strong. I'll have to teach you for another 2 hours to deal with the compression thingy. Know the PCP is a strong place. But, you know, on RTM, I've always told you that anyway, so there's nothing new with that. In the compression class, we'll just go deeper into it and explain it all so that it's instinctive to you. But yes, what we do is we get ourselves back over here to this left shoulder level. Now, we could have taken a trade at this left shoulder level, but it really ruins our R. Absolutely destroys our R, because our target is over here. If our entry is there, then our entry to our target is much smaller than our entry to our stop loss. So that's no good. So you have to come back wait until you get good R. And good R is over here. We have the left shoulder here, then the kink of it. But you can look for PA at the QM in LTF. You can, and then you have to trade it in LTF, though. You can't trade it in this scale. So, alrighty. Now, even better is back here, but it didn't get over to here, and it doesn't have to. But this is a gorgeous place, and you can take that trade. Once your stop loss is beyond this, that's totally reasonable to get inside there. And on this kink, enter. and then take price up to the target, which is up over there. Gorgeous, really, really gorgeous. Very simple. And that is, most of your trades are going to look like this one. Maybe it looks a bit messy, but once you start drawing all of your flags and where they have advanced to before they retraced and whatever, you can really start to draw your flags and your upper and lower flag limits. And then you can really rule the market. So just understand, I've shown you in this class about drawing upper and lower flag limits. They're always going to be exactly the same method. Do that, draw those, and you are going to have your targets worked out very, very easily. And you'll then know what PA is very, very easily. So, okay, we do have a trade on that. Lovely. And it worked, and it's... Oh, what happened? Back. I see. Okay. That is the end of the examples that we have for here. Now, we have been going at this for 2 hours anyway, which is as long as, or half an hour longer than the webinar was meant to be, but that's all right. I'm going to have to give you another class on this same stuff. I'm going to be taking all of my examples from your charts. Now, just hold on 1 second. We did have... I was looking in here, and there are loads of gorgeous examples in here. This is a really great one. And this has as much as we need in it as well. So, Victor, you have some really great stuff in there. I want you, and I want everybody else, to go back over everything, all the homework that you've done, and related to the class that you've just gotten. I want everybody to have their 10 good diamonds, and everybody to have their 10 good Quasimodos before the next class. I'll give you a week to do that. Now, looking back over your own work, if your work has been good and you have gotten 10 perfect diamonds and 10 perfect Quasimodos, just mark them out. I just want you to copy and paste them back into your homework and draw them in a way that I can understand them. And if they're perfect, they're perfect. That's great. And we'll use them again in next week's class. So hopefully we can get through this part of next week's class early and then get straight onto the next topic for the lesson in that class. It might be a bit long. It might be maybe a 3-hour class. I don't know. We'll wait and see. But I want everybody to have their homework done, and I want them to have their homework done based on the lesson that you've just had here. There's a lot to understand with it, but everything that you need to understand I have put into this class already. You may have to watch the video 10, 20, 30 times. Yes, it's a short video, and yes, I haven't said much in it, but everything that I've said is extremely important and should be made instinct. So for now, people, that is that. I'll give you exactly 1 week to get this done. Please have it in sooner rather than later. I don't want to be trying to make up all my charts from your work on next Monday morning before, with a few hours to go to the class. So try and get it all in as early as you can. Really put your heart and soul into this, because I know that if you don't put your heart and soul into this work, you're not going to put your heart and soul into making these classes actually work for you. So you're going to get out more than you put in, but you've really got to put in a lot, because it's a very simple business once it's instinctive to you, but to make it instinctive takes an awful lot of effort from you. It takes an awful lot of work. And of course, what we're going to be going on to later is the mentality of a trader as well, and that is another massive part of this. In our last class, we're going to be going into your psychology and making sure that you can make trading work for you. Fingers crossed. It doesn't work for everybody, but with the right teaching and the right mentality, it does work for everybody. So yes, that's enough for now, people. Thank you all so much for coming along. Do finish off your homework. Do mark all your homework. Go over every single chart that you put up and make sure that you have marked in what you understand from this class about it, and make sure if it is a good Quasimodo, if it is a good diamond, that you mark it in, copy paste it again, and if you have to add to it, do add to it. I want to see you do great work here, because all my examples are going to be coming from your homework. So give me some brilliant examples. Yay, excellent. Thank you so much, everybody. I really hope you're going to get something out of this. I think a lot of you have already gotten a lot out of this already, even if it's just about putting your stop loss in the right damn place. Put it in the right damn place and keep it there. But yeah, there's loads to come now, people. I will see you in a week. Have a great and very productive week. Thanks, everybody, so much. Cheers. Great students, and it's great to hear voices on the first class. I'm even going to hear more voices on the next one. I'm so happy. All right, I'm going to stop this here and see you all later. Thanks all so much. I'll see you all again.